Now, Yes Bank, that'll be the stock in focus today. The Reserve Bank of India audit report has found nil divergence in the bank's asset classification. Abhishek joins us to run us through all these details and what does it exactly mean. Abhishek, good morning. Run us through all the details.
Good morning, Nigel. So, Yes Bank has announced that, they have reported a nil divergence for the FY18 loan book. Now, what does this nil means is that the gross NPA difference is less than 15% of the book or is at 15% of the book. So, as per RBI's classification, if at all the gross NPA difference is above 15%, then they have to classify it as the divergence. Now, remember, for instance, IndusInd Bank did mention, their divergence actually falls below the threshold level of RBI. That is why there was no need to report a divergence number. Over here, it is nil. So the difference is bang on at 15% or at the threshold level. So there is nil divergence between what the RBI has classified as NPA and what the bank has classified as NPA. So this is a big overhang which has been addressed, which means that the worst is over for the bank. The new MD and CEO, Mr. Ravneet Gill, will take charge on 1st of March. This will also reinstore, investors' faith into the bank, and it will also aid in, raising capital. It will ease the capital raising process because of addressing this big overhang. Back to you.
All right, Yes Bank will be in focus today, but Abhishek, stay on because DHFL will be another important stock that will be on our watch list today after the company's joint MD and CEO Harshil Mehta resigned from his current position with immediate effect. So tell us more about it.
Well, to begin with, immediate effect resignation has been submitted by Harshil Mehta and that has been approved by the board yesterday. So he was the joint MD and CEO of the company, and now post this resignation, he will take charge as, the executive president of the retail business, and he'll step down from heading the overall, housing finance business of the company. Back to you.
Okay, all right. Thanks so much for that, Abhishek. We'll keep an eye out on both those two stocks, Yes Bank as well as DHFL. Well, we are pulling the curtain down on results season, but Sonal's going to be busy because ONGC, that'll be the stock in focus today. Sonal, tell us.
Absolutely. So, well, remember, Oil India's numbers were better than estimates, and this was led by the higher gas realization for that particular company. So, sequentially, there will be a decline because, remember, crude has fallen sharply on a quarter-on-quarter basis. So, in terms of the major numbers, we're expecting revenues to decline by around 3%. The EBITDA is also expected to decline by around 4.5% and 15,000 odd crore rupees. Operating profit margins also will see slight decline. They are expected to come in at 55.4% versus 56.4%. Profit after tax expected to decline by around 11%. Now remember, we are talking about the crude prices falling down, and that's why net crude realization, it is expected to decline by around 9% sequentially and is expected to increase by around 10% on a YY basis at $66.5 per barrel. In terms of oil production, that also is expected to decline both on a sequential as well as on a YY basis. Gas production, there we'll see some positive pattern, is expected to increase by around 4% and 5% sequentially and on a YY basis. Now remember, the lower oil prices, they will partly be offset by the 10% higher domestic price. Gas prices, they are revised every 6 months, and they were revised in the month of October, and they are currently at around 3.36 MMBTUs per dollar. So overall, gas segment is expected to do well. Some weakness will be seen in the net realizations in terms of oil prices, but overall, we are expecting a weak set of numbers from ONGC this time around.
Okay, all right. Thanks so much for that, Sonal. Well, let's shift focus then to the auto space. Ashok Leyland as well will be reporting its Q3 numbers today. Sonia's with us. Good morning, Sonia. Well, we expecting a weak quarter this time around?
Yes, we are. In fact, the stock is in a bear market. It's halved in the last 12 months. And this time around, we're expecting a weak quarter on all parameters because volumes have been quite weak for the company. In fact, this quarter, you've had the total volumes fall by 6% year-on-year, almost 16% on a quarter-on-quarter basis. That's because there was a sharp fall seen in medium and heavy commercial vehicle volumes, which fell almost 17% on a year-on-year basis. As we know, the problems, tight liquidity, lower freight operator profitability, as well as a weakening demand, higher inventory levels are reasons why there will be a dip, both in a dip from the top line and some margin erosion as well. So we're expecting the revenues to fall by 11.5%, the EBITDA to go down by almost 30%, the margins will fall to about 8.9%. So sub 9% margins is what we're looking at versus an average of 10 to 11% that we've seen over the past many quarters, and the profits will go down by about 30-odd%. So it'll be one of the weakest quarters for Ashok Leyland. Perhaps a lot of it is in the price because, as I mentioned, the stock has halved in the last 12 months.
All right, Sonia, thanks a lot for that. But also tell us about Jet Airways. The numbers are not expected to be this good this time around.
Well, the numbers will, of course, be secondary. I mean, as we know, the stock has gone from 800 to 220 in the last 12 months because there's no clarity on the fund infusion. So all eyes will be on whether any details come through on, fundraising, stake sale, etc. On the numbers front as well, this is going to be a weak quarter for the aviation space. So from the passenger growth itself, there's been weakness. This time around as well, passenger growth has gone down by 5% for Jet Airways. That's why we're expecting the revenues to come in at about 6,300 crores versus 6,086 crores. These are Edelweiss estimates, by the way. This could be a fourth consecutive quarter of losses for Jet Airways. So Edelweiss is anticipating a loss of 1,050 odd crores. However, the losses could be lower than what we saw last quarter. Last quarter, it was almost 1,300 crores of losses. It could come down to 1,050 crores because of lower crude prices. The non-fuel cost per seat kilometer is expected to be very elevated because of higher forex losses on account of the rupee weakness. But because fuel costs have been flat, we are expecting the losses to be low on a quarter-on-quarter basis. However, as I mentioned, all eyes will be on whether any announcement comes through on fund infusion.
Okay, Sonia, we'll keep an eye out on the numbers as well as the fund infusion plans. Well, we'll slip into a short break. As we do that, here's something to note. Dear viewers, the new rules for DTH and cable have come into effect, and now you can choose channels you want to watch by March 31st. To keep watching India's #1 English business news channel, CNBC TV 18, just call your cable or DTH operator and ask for CNBC TV 18, only for ₹4 per month.